All right, guys, welcome back to Trading Simplified. So today I got asked by a fan, can you review XNTK? We are going to make a video just on that. And thank you to my two members over here. If you feel like supporting the channel, definitely check out the membership. Really appreciate your support, guys. All right, so I'm using the Fidelity platform to review XNTK. Let's go over the summary real quick on this. If you look over here on the right side, XNTK's stated objectives, they review the performance of the NYSE Technology Index that tracks publicly traded technology companies. So tech companies, 80% of its assets comprise of this index. And now, what really stands out here is the index is composed of 35 leading US listed technology related companies. So they have to be high performing companies to make it into this ETF. Let's review the portfolio composition. ETF, sector equity, passively managed, style objective, technology. So breaking down the holdings, we have a total of 36 companies. What I like about this is for once, the top 10 holdings don't make up the majority of the portfolio. So you'll see 10 out of 36 in this ETF make up 37.65%, while the other 26 companies make up 62.35%. So a nice diversification there. Looking on the geographic exposure, North America, and if you go by country, you can see United States by 85%, China, Taiwan, Netherlands, and Brazil. Now, the leading technology company in 2024 is NVIDIA, and it is leading the pack at 5.64%. And then you have Micron MU at 4.08%, Qualcomm at 3.75%, TSM at 3.68%, Applied Materials, Netflix, Broadcom, Meta, ASML, and Lam. What do you notice about these top 10 companies? They are semiconductor heavy. So 41.83% goes to semiconductors, software 16%, broadline retail 10%, media and services 6%. So keep that in mind when investing in them. Information technology, you are way over concentrated, and 69.31% is in technology stocks. The market capitalization of large cap is 56.71%, and the giant is 41%. So you are investing in a style map that consists of growth, large companies only. Now, looking at the distribution expenses, you are not in this ETF for dividends. The distribution yield is 0.33%, so practically nothing. It matches the gross expense ratio at 0.35%. You are here for growth. And let's look at the performance, because that kind of shows you where this is at. Looking at the performance and risk here, if you were to invest a growth of hypothetical $10,000 in 2013, your $10,000 investment is now worth almost $60,000. That's an incredible gains over 10 years. And looking at it on the chart, from 10,000 to 60 grand, that means that you made an average of 18% each year. That is excellent. The 1 year return on it, because NVIDIA is going to the moon, all semiconductors, 47% return. So kudos to you. If you have this ETF, that's awesome. The life, though, is a little concerning at 7.25%. Let's take a look at the chart and just look at it over a long-term perspective. So I put on the max on this chart, which tracks back to about 2000. The year 2000, this ETF opened at $50 a share, and if you bought in 2000, it sold all the way off down to $12. And anybody that bought at $12 is up so much money right now. So it went from $12 over the course of 24 years up to $187. That is an excellent return, but it didn't start off that way. So this, you know what this tells me? This is very volatile. You have to have a dollar cost average strategy to ride these waves coming up and coming down, because when it gets red, it really sells off, and when it gets bullish, it really goes green. So definitely keep that in mind with a long-term perspective if you were going to invest in a technology fund like this. Taking a look at the analyst ratings, 4 stars out of 227 funds, 10-year, 4 stars out of 155 funds. Short-term looks strong, long-term looks strong, but that's up to you guys to decide. Doing some quick comparisons so you guys can see if you want to research this on your own, but it is pretty much a top leader with a low expense ratio. So if you look here, XNTK, The Spider Technology ETF, these are the snapshot features of it. Passively managed, up 42% in 52 weeks. Gross expense ratio 0.35%, compared to its competitors here at TECB, only made 36%, IGM 44%, IYW, the iShares US Technology ETF, 0.4% expense ratio, made 39%. So it is beating them. So there's definitely something to consider. Looking at the statistics, you can see institutional ownership makes up 56%. It's an ETF, just so you guys can see this, open-ended investment company. And the net expense ratio of XNTK is 0.35%. Just keep in mind you are very technology concentrated in this, so compare it to your other index funds and ETFs to make sure you don't have too much technology if you are investing in this. All right, guys, thank you so much for tuning in. If you liked my video, definitely check out my playlist, the Fidelity Index Funds and ETFs, Vanguard Investments, my Trading P&L 2024, and check out all of these playlists that I've created just for you guys for free. And if you feel like giving back, check out my membership. It costs about $2 a month. It's really just to support me and just, say thank you for making the videos and you're learning something from it. So I definitely appreciate it. Until next time, guys.